All right, let's jump right into this. Imagine a single company that is so fundamentally crucial to the modern world that practically every major tech breakthrough happening right now literally depends on its hardware. We're talking about the raw power behind ChatGPT, the complex neural networks running autonomous vehicles, massive global data centers, you name it. Today, that company is obviously NVIDIA. But what's absolutely wild, and what even seasoned investors sometimes overlook, is their actual origin story. See, NVIDIA started out as a scrappy little graphics card company, fighting for its life in a ridiculously crowded, cutthroat market. Honestly, most of their early competitors just vanished from the map. Yet, NVIDIA didn't just survive, they somehow adapted to become one of the most valuable entities in human history. So welcome to this explainer, where we're going to unpack NVIDIA's massive trillion-dollar masterclass.
The sheer scale of this turnaround is just staggering. And as we go through this explainer today, I want you to keep this one dramatic question right in the back of your mind. How exactly does a near-bankrupt graphics card company become the undisputed king of artificial intelligence? You know, when we analyze a company's growth strategy from an investor's point of view, we're usually looking for, well, clean, predictable upward trajectories. But NVIDIA's path? It was anything but predictable. The stakes were incredibly high, the capital expenditures were off the charts, and the valuation trajectory we're analyzing today is almost unbelievable. To really wrap our heads around the trillion-dollar valuation they're commanding right now, we actually have to start at rock bottom.
Section 1. The Graphics Card Startup. Let's wind the clock back a bit. So it's 1993, and early computers are literally choking on complex graphical data. Video games were just starting to push the boundaries of what home computers could actually display, and the core bottleneck was that traditional computing architectures just couldn't handle the sheer volume of math required for rendering 3D environments. It was a structural limitation. But NVIDIA's founder, Jensen Huang, had this brilliant early vision. He believed the future required a totally different approach. Enter the Graphics Processing Unit, or GPU. As you can see here, this was a specialized processor designed specifically to efficiently handle massive amounts of visual data. And look, it wasn't just about making video games look prettier, it was about fundamentally rewiring how a computer processed intensive visual calculations.
To really grasp why this is such a massive structural advantage, let's compare the two. Think about traditional CPUs. They are incredibly smart and super fast, but they process tasks sequentially. They do one thing, then the next, then the next. The hidden superpower of the GPU, though, is parallel processing. It performs thousands of calculations simultaneously. So instead of calculating a single pixel on a screen at a time, a GPU is rendering thousands at once. From an engineering standpoint, this is a total paradigm shift. But from an investor standpoint, this was massive. It meant unlocking an entirely new total addressable market by solving a core problem that traditional chipmakers just couldn't crack. But here's the reality check. Having a revolutionary concept doesn't instantly pay the bills. Success was not immediate at all for NVIDIA. They faced fierce competition from heavily funded rivals, and the financial situation was getting deeply, deeply terrifying. At one specific point, this startup was literally only months away from running completely out of cash. Now, if you're an early investor looking at this, it's a massive red flag, right? Their cash burn rate was terrifyingly high, the market was totally unforgiving, and outright failure wasn't just possible, it was probable. They were staring straight into the abyss, dealing with the very real possibility that their capital was going to evaporate long before they could capture the market.
But if you look at their timeline, it really reveals the incredible long game they were playing here. They managed to navigate from that precarious 1993 founding, somehow survived that agonizing brush with bankruptcy, and pushed forward to a defining launch in 1999. And it's that launch that ultimately sets the stage for the massive AI boom of the 2020s. This timeline bridges their absolute lowest, most desperate point directly to their foundational pivot, proving that sometimes just surviving the early days is what dictates your future dominance.
Which brings us to Section 2, the gaming hardware revolution. Let's look at the hardware boom.
This is where the financial gears really start turning. In 1999, NVIDIA drops a product that absolutely changed the industry landscape forever, the GeForce 256. They famously marketed it as the world's very first true GPU, and its timing was flawless. It arrived right as this massive global gaming explosion took hold. The market was just expanding at breakneck speed. Gamers wanted wildly realistic graphics, and developers desperately needed the raw processing power to build those immersive 3D worlds. Well, NVIDIA delivered on both fronts. Because of that, they captured massive market share and built this incredibly loyal customer base. Over the next decade, they generated billions in revenue.
And here's why that matters. This wasn't just healthy profit. This was the foundational financial war chest they were going to use to fund a highly speculative, completely unbelievable future bet.
Let's dive into that in Section 3, the massive AI bet.
Okay, so put yourself in the shoes of a Wall Street analyst at the time. The broader market just saw GPUs as highly profitable hardware for video games. But NVIDIA, they realized these chips were perfectly structured for something else entirely: training artificial intelligence. Think about it. To train an AI model, you have to ingest and process enormous amounts of data much, much faster than a traditional processor can handle. The parallel processing of a GPU was literally the exact structural solution needed for the job. But the big risk here was investing heavily in AI way before it was mainstream. From an outside investor's perspective, this decision looked incredibly dangerous. I mean, they were taking billions of dollars generated from their incredibly successful gaming division and just pouring it into specialized software and complex data center tech for a sector that had zero guarantees of ever becoming a profitable mainstream market.
But you have to admire their unwavering corporate conviction. They were guided by one core belief: that the future ultimately belonged to artificial intelligence. And they had the insane patience to hold on to this belief while the broader market largely just ignored them. They knew that if AI ever truly took off, the amount of compute power required would be absolutely astronomical. So NVIDIA essentially spent years and years building the infrastructure for a future that hadn't even arrived yet. They were meticulously positioning themselves to supply the picks and shovels for an eventual digital gold rush. And honestly, it's that kind of compounding vision over decades that separates a decent company from a historically great one.
Section 4, the trillion-dollar boom. Let's fast forward to the modern era.
Fast forward to the 2020s, and artificial intelligence just completely explodes into the mainstream consciousness. Chatbots, image generators, almost overnight, every tech giant around the world abandoned their old roadmaps and scrambles to build AI systems. And whether you're talking about consumer-facing apps or highly advanced enterprise software, every single one of them suddenly needed immense computing power. So, where did they all turn? NVIDIA. Tech giants started spending billions upon billions of dollars specifically buying up NVIDIA chips to build out massive AI data centers. This created an absolutely wild economic environment where intense demand drastically outpaced supply. Because everyone desperately needed NVIDIA's computing power yesterday, the pricing power shifted entirely to NVIDIA. Their gross margins expanded aggressively, and profits skyrocketed at a pace we have rarely ever seen in the history of capital markets.
Trillions, that's with a T. Let that massive financial milestone sit on the screen for just a second. This right here is the ultimate payoff for those investors who actually believed in the long-term vision. Because of that incredible, unprecedented surge in profit and revenue, the broader market finally woke up and recognized the structural advantage NVIDIA possessed. Their market valuation climbed rapidly past the billions and firmly cemented itself in the trillions of dollars. A company that once solely focused on rendering polygons for video games had successfully positioned itself as the literal, indispensable backbone of the modern AI revolution. It's just wild.
Moving on to Section 5, why NVIDIA won big. Let's break down the mechanics of this victory. So how did they actually build such an impenetrable fortress? Because look, a $1 trillion valuation, it doesn't just happen by pure luck. It came down to a very carefully constructed, four-part economic moat. Number one, they invested early. They spent massive capital preparing for the future while competitors were hyper-focused on the present. Number two, and from an investor's perspective, this is absolutely crucial, they built a developer ecosystem. They didn't just sell physical hardware. They created the software platforms like CUDA that AI developers completely relied on. Hardware can eventually be commoditized, sure, but creating a software ecosystem with massive switching costs? That locked in their dominant market position. Add in step 3, relentless year-over-year innovation, and step 4, bold, long-term leadership from Jensen Huang, and you have the recipe for a historic competitive advantage.
The core takeaways here are incredibly profound for anyone analyzing business strategy today. Lesson 1. The biggest opportunities almost always appear well before the broader market notices them. If you're waiting for mainstream consensus, you're usually way too late to capture the exponential growth. Lesson 2. Investing heavily in the future, even when it involves significant present-day risks and terrifyingly high cash burn, can create absolutely enormous rewards if your underlying thesis is correct. And finally, Lesson 3. Innovation paired with extreme patience equals a lasting competitive advantage. NVIDIA spent decades, literally decades, preparing for a world powered by AI, and when that world finally showed up at their doorstep, they were practically the only ones truly ready to capitalize on it.
So today, calling NVIDIA just a chip company is totally missing the bigger picture. They are the undeniable backbone of the global AI revolution. Their products are fundamentally powering complex scientific research, autonomous vehicles, advanced data centers, and countless other innovations that are actively reshaping our global economy. What started out as a struggling, cash-poor startup in 1993, literally begging for survival, is now the foundational pillar driving the most significant technological and financial leap of our generation.
Which leads us to our final and perhaps most critical question from an investor's perspective: can NVIDIA actually maintain this dominance in the coming years? Is the intense demand for AI going to be sustainable enough to drive future revenue growth, or will well-funded competitors eventually break through those massive hardware and software moats to capture market share? We all know the tech landscape is notoriously unforgiving, but as we've explored today, betting against NVIDIA's long-term vision has historically been a losing wager. I invite you to consider this question deeply. Think about the market dynamics, the massive capital expenditures, and the impenetrable moats we've covered today. All right, that wraps up our explainer on NVIDIA's incredible journey. Keep learning, keep analyzing, and I'll see you in the next explainer.